Welcome to the Leaders in Payments podcast, where we talk to C-level leaders from across the payments landscape. We'll be discussing the products and services that impact the payment space today, as well as trends and predictions for the future of payments. We will also hear stories from our guests about their journeys to the top.
Hello and welcome to the Leaders in Payments podcast. I'm your host, Greg Myers, and on today's show, we have a very special guest, Max Galash. Hopefully I got that right. You can correct me if I was wrong. He is the CEO of Coinchange. So Max, welcome to the show.
Thanks for having me, Greg. Appreciate it.
Absolutely. So if you don't mind, tell our audience a little bit about yourself, maybe where you were born, where you grew up, where you went to school, a few things like that.
Okay. Yeah, I'll give you a background on myself and the business. So I was born in Belarus. So it's a far outreach in Eastern Europe, the USSR bloc. So I can speak Russian, Italian as well. I lived in Italy for a bit. I went to school at UFT, University of Toronto. I graduated as electrical and computer engineering. I worked in investment banking for a couple of years. I worked at the SAP Consulting. So it's a global tech consulting firm from Germany. I had my own startups all along since I was probably 17. I sold one business. It was a cannabis automation platform, so cannabis seed to sale platform. Early in the days in 2011, I had a small VC venture fund, pre-seed venture fund with about 10 million AUM. We mostly focused on social and GameFi businesses back then. For the last 5 years, I'm working on my own crypto company called Coinchange, and it's pretty much a brokerage and asset management platform. So we've raised about $10 million. We're about 50 people, we're pretty global, office in Warsaw and office in Toronto, licenses in Europe, Canada, and the US, LATAM as well. So we facilitate somewhat on and off ramp transactions, crypto to fiat, and primarily as the core and foundation of the business is the asset management. So we're providing structured investment products to B2B clients and the market, through our app. There's different ways to distribution, app API, fund, SMA model, but the essence of that is a multi-manager investment management platform.
Okay. And so who is your typical customer?
B2B primarily. So it's a crypto operators, exchanges, neobanks, payment platforms, wallets. So we don't really offer D2C. We started as a D2C platform as well back in the day. So there was a few other big ones like Celsius, BlockFi, and they're all gone. They're all bankrupt. They're all been wiped out by the market. There was like they called it a shadow banking. So pretty much taking uncollateralized, not uncollateralized, unsecured loans on the balance sheet and then working with them in the way that they deem appropriate, right, to generate any return. It was all black box, and pretty much clients were left hanging back when shit hit the fan, and crypto market exploded in 2020. After a few big bankruptcies, right? And then FTX happened as well. So that's kind of cleaned up the system. But we started retail, and we were part of that retail wave when the market was going up. And then we had to reposition the business and find a new customer. So kind of pivoted the business towards B2B. So provided more transparency, licensing, visibility into the business for the B2B clients. And they act as distributors quite often to their retail clients. So it's a B2B2C model. You can think about it as an infrastructure or like a SaaS.
Okay. And how do you go to market? Do you have a direct sales team through partnership channels? How do you go to market?
Mostly partnership channels, events, partnership channels. We'll do some research reports. It's all pretty much, for now, at least at our scale, it's all high touch businesses. Okay. So there's no fully automated way for you to actually plug and play. I mean, there is, but people usually have a lot of questions about the investment products, right? It's what are the risks? What's the compliance? What's the regulatory about it? How do we sell it to our end client? How do we explain it to the end client? So there's always a bit of a hand-holding along the first touch point to the implementation and the activation. There's usually a bit of work that needs to be done by the team.
What does that time frame look like from first touch to activation?
The clients that really want it and want to integrate directly as a smart contract, let's say, right? Because we have a smart contract endpoints as well for them. So smart contracts eliminates your back office and mid office primarily. So it's kind of a operations done on chain by code rather than by people. So it's pretty quick. I mean, we'll give them the endpoints and they integrated within 2-3 weeks. if they know whether they're looking for actively managed portfolios, as an example, right? And they know what they're getting in. But the clients that have no idea or have never sold investment products and just looking to introduce them, let's say payment platforms, right? That try to diversify over their merchants, if they have an overnight interest or a savings account or investment product, depending on their risk profile, they will have a lot of kind of diligence, right? And exploration, because they're still discovering the products and they're talking to the other vendors. So those ones can take up to 6 months. And so depending on the need and the proficiency of the client or the partner, it can be either from a couple of weeks to 6 months.
Okay. So
on average, I would say it's 2-3 months. You can just take the middle point.
Okay. And when you say sort of the B2B, are there like specific verticals, or can it be basically any B2B company?
No, for us, it's all crypto related. They have to have a crypto on their balance sheet. So it has to be an exchange or a payment platform that uses stablecoins or crypto, or a wallet that you can use a self-custody wallet to hold your crypto. Right, so there's different crypto operators, fintech operators that we go after. We're not going to go after the logistics business, a trucking business or a plumbing business, right? So it's all, they have to have some crypto on their balance sheet to be able to offer that product to their clients.
Okay, and it sounds like it's truly global.
Yeah, primarily emerging markets. So we're not licensed by SEC for the asset management business in the US. We'll offer on an off-ramp in the US, so as an MSB. Canada, we're also offering as an MSB on an off-ramp. And some SaaS solutions when the client distribute the end product and they're fully liable for the marketing and the custody of that asset. But emerging markets, Europe, we're fully licensed for that. Emerging markets, Latam, we're fully licensed for that. So there are regions where we go directly to kind of B2B and can act as an asset manager, and some regions we can also act as a technology provider. So, but we're not actively selling in the US, Canada, UK as an example, right? Most emerging markets, because they have a problem to access USD-denominated products of that nature, and they have a lot of stablecoins saturation in the market already, primarily for payments. So those fintechs that already got a bit of a market share in the payments or stablecoin wallets, they're looking to diversify and introduce new products. So in the US, the market is a little different. So, and there's also better access to traditional products in the USD world. So, I mean, I don't have to name them, but not only T-bills, but money markets, right? Overnight products in the banks and so forth. So that's, the need is more in the emerging markets right now. So that's where we focus.
Okay. And how would you say you differentiate yourself from your competitors out there?
There's not so many competitors right now. This niche is pretty new. So, I mean, we don't resell a T-bill. So a lot of businesses that started 2 years back, as an example, when FTX collapsed, after that, they started offering tokenized T-bill. So they'll take $1, they'll go through a BlackRock or some other asset manager and send them $1. Right, and they have some systems to represent the value, a unit value for you, right? And it's on chain, but it's all T-bills. It's all pretty simple product. What we do, we offer a multi-manager approach. So we have different managers actively managing the assets on our accounts on different venues, right? So meaning that they will utilize different trading strategies, options, market neutral, basis trade strategies, and based on those, we can comprise portfolios. And those portfolios we offer to the B2B client that will be reselling. So and we can structure portfolio in different ways. So principal protected, no principal protected. Drawdowns, volatility of the portfolio can be customized for client. So primarily, quite a lot of payments platforms, they will go to the principal protected type structure product. So they want to make sure that they put $100, they take $100 back, and they don't want to really be evaluating the strategies that are, if they're high performing, low performing. We just want to make sure that the principal is protected, and we have a target rate of return for that product. So let's see, we'll say 5%, 7%. Stable coins is a target return with some drawdowns, but principal protection, right? So they'll see the fluctuation of the return, right? Because there are some drawdowns of the market neutral strategies, but the principal will be protected, so they can always take that $100 back. Right. And if they want liquidity daily or weekly, so it also can be built in, but usually it's either weekly liquidity because nobody's going to put $1 for a day and then take it out tomorrow. Usually it's at least a week. So that's the differentiation factor. So we don't really resell somebody else T-bill or credit. There's a lot of private credit that's coming on chain as well. So let's say somebody in Nigeria needs factoring for their iPhone import business, and they'll create they'll ask the depositors in the US to put stablecoin. They'll give them some kind of a token representation of that. They'll move USD to Nigeria for the business, and it all encapsulated into the blockchain, right? So that's a private credit. There's quite a few private credit platforms as well. So they also pay you on your USD deposits, pretty much a lot, right? A factoring. So that's also different, but there's other methods like that exist to generate yield on the stablecoins, right? But very different to what our multi-manager approach is. So I don't see direct kind of competitors who do exactly what we do, but there are other that provide yield, right, on stablecoins or other assets through private credit and T-bills.
Okay. Well, when you step back and look at the industry as a whole, and obviously you can answer this through the lens of what you guys do, where do you see the industry headed in the next, say, 3 to 5 years?
I'll tell you where it is right now first. And I think the only real use case right now is payments. So in stablecoins. So stablecoins is pretty much tokenized dollar. So everybody talks about tokenization, but nothing really tokenized except the dollar. Like USDT has been around for 12 years. USDC has been around for 7 years. So, and they're actively used in remittances, cross-border payments, trading on an off-ramp. So when you want to get into the crypto economy, you'll buy a stablecoin. You're not going to buy Dogecoin to go into the crypto economy. You'll buy stablecoin, then you go on exchange, and then you buy a token that you want. But to get in, you'll buy a stablecoin. So because you're going to use your credit card or ACH to get in. So it's kind of a bridge. Stablecoin is a bridge between banking and trading and exchanges and crypto. And remittances, as I mentioned, because I work on the emerging markets, we see a lot of that happening. It's already embedded, and there's a lot of abstractions because blockchain has gas fees. It has wallets that you have to manage on chain. So it has a lot of abstractions. People already like Circle, they already built a lot of layers of abstraction. So the fintech can easily integrate through an API, Circle wallet for USDC payments, and then initiate the payment globally, settling in seconds, going global. Right, so very good for remittance and cross-border. So right now, the payments is the only use case, and it's growing really fast. And there's a lot of platforms globally that support that use case. Big ones like BVNK as an example, and smaller ones like regional, like Lemon, let's say, in Argentina. So, but the future of that, a lot of people are looking into the issuance of financial products on chain. So tokenizing something is not really cool, because it's already issued on real world. It's already has distribution in the real world through real brokers, investment bankers, so through like merchants, through the existing channels, and then just bring it on chain, meaning what? Meaning like just enabling the settlement 7 days a week, 365 a year, right? It doesn't really add a lot of value, but the kind of a lot of hope is for that eventually financial products can be issued on chain as well. So meaning that if it's issued on chain, it's fully redeemable on chain, it's fully legal as well. You can enforce it through the court. So, and it's already happening in Singapore and Dubai. They're already testing different like real estate issuance on chain, not tokenization, but issuance. Debt issuance on chain. So if you're a business, you can come not doing your debt issuance in the bank and then go on tokenizing it, but go on a chain directly issuing it there without replicating the offline world. So yeah, so those things, I think that tokenization is kind of a big thing, but the use case hasn't really been yet found except the stable coins and payments today.
Do you see a day when I go to the dry cleaners and I pay with stablecoin to get my laundry?
Yeah, you just won't notice that. You do it right now, right? You don't pay cash.
Right.
You pay with a credit card and you pay. You don't really take it out. It's in the phone. So just this, I think the blockchain itself is not really a consumer product. It's going to be a backbone of the settlement network rather than a crypto NFT app or some sort of a consumer-facing app. It's all going to be USD anyways for you, or a currency that represents it. But the tokenized asset will exist on the blockchain. at the backbone of that. Even BlackRock right now, I spoke to them recently. They do, I think they do about $1 billion of settlements in tokenization a day. So they have their own Beetle, they have their own token, stablecoin called Beetle, and they already do some settlements with their partners and brokers on their own blockchain. So same happens for the JP Morgan has their own blockchain as well. So they're already doing it internally. Just in the grand scheme of things, it's still a very small, right, kind of risk-free for them float that they're settling. But eventually it's going to be more. The problem right now with them that they're discussing, let's say JP Morgan, BlackRock, and the others, how do we bridge together our closed ecosystems, because they have a closed blockchains. It's not an open blockchain.
Right.
So because you have to have compliance, and there's a lot of layers of compliance and regulation, primarily around the financial services. So they're thinking, okay, how do we really marry them together and so they can talk to each other? Not like databases talk to each other, but like an actual blockchain. So.
Right. Okay. Well, let's switch gears a little bit and talk about you. Maybe walk us through your career journey, how you got to where you are today.
Yeah, it's. I've been in tech for all my life. I started a couple of businesses, as I mentioned. One of them has been acquired since 2017, and I started to buy Bitcoin in 2018. So it was pretty simple. I took a sabbatical and was dabbling in crypto, and it went from 2000 to 2017. I remember that was my kind of wave when I started buying. Then crashed to 3,000 in 2018. And I kind of sticked around, but I didn't like the experience, how I in Canada could buy it from those existing brokers that existed. There was a lot of hidden fees and a lot of complexity. And at the same time, I was using TransferWise. It's called Wise.com. You probably know Wise. It's a kind of a neobank, but primarily for the cross-border payments. So it was really clean. They showed you the rates, everything very transparent. So we wanted to build something like that first. That was the kind of the Coinchange journey when we started in 2019. We thought about it, did all the market analysis. We knew from the product perspective the steps we need to take. So 2020, we started building that. 2021, we only took it to market. And it already had the asset management component, but only on DeFi rails. Very different to what we do today. So that was the journey how I got into the Coinchange. So try to change the brokerage business pretty much in Canada. But then we realized it was saturated. It was raced to the bottom, compression of fees, a lot of regulation, hard to go global. So then we pivoted towards the DeFi EU platform, right? Again, within the application. And then we pivoted to the asset management of B2B businesses. We are right now multi-manager B2B business, multi-manager fund. And we also have a hedge fund, a fully licensed hedge fund in Gibraltar, where we service institutional clients, primarily family offices. So yeah, and I've always been the entrepreneur since I was, a small kid. I was, on the parking lots. I was acting as a parking superintendent, looking for the neighbor cars and getting paid a little bit. I was also collecting free bottles and glass bottles and taking them to the beer store to get some cash for the ice cream. So yeah, it was kind of there since I was a little kid. But then eventually you do more and more and more, and out of snowballs, something doesn't work out quite often, right? You just have to have an ability to learn from those missteps and then try to self-correct for the next step. It's I think the venture is, there's a very brutal statistics that it's only like 3 or 4% of the startups actually succeed, right? Or get big. And so most of them fail or stay as a family-owned business, right? That barely pays for the family bills.
Right.
So it's not an easy journey, definitely. But you definitely, if you're able to self-reflect and learn, and that's probably interesting to have such a career. Right?
Okay. Well, what are some things you're passionate about? Maybe one work-related passion and one personal passion.
Reading would be probably a personal passion. My family have their kids. It's my passion too. My kids, my wife, obviously, and work passion. I like in work. Also reading. Yeah, I like reading about what's happening in the industry and what's happening in my niche. Right, small world. Probably, if you talk about the day to day, I would say hiring people. That's also pretty important, and I like doing that. Finding the right people that will probably have the right skill set for the problem. So that's also that I try to spend more time on and analyzing people you have and the efficiency of that kind of mechanism that exists. So I would say those things.
Okay. So if someone comes to you, Max, and they're maybe looking at building a career in financial services or fintech or even payments, with your experience, and since you said you liked hiring people, curious sort of what advice would you give them to be successful in this industry?
Successful in hiring or successful in fintech?
Successful in their careers in fintech if they choose to go.
How do they approach employment opportunity, right?
Yeah.
Or starting their own business?
No, more on the employment side.
More than on the employment. In crypto or in fintech in general?
Just fintech
Crypto
in general.
is a little different, and it's a pretty nascent industry. So a lot of things that we looked at is you don't have to have a past experience, direct past experience, right? In crypto, like at least 5 years when we started. And even right now, you can cross-pollinate your experience in TradFi to crypto pretty easily, especially on the asset management side and in payments as well. I think approaching the employer and going to the interview, what we look at least, what we like when people don't really. First of all, I mean, you have to have a deep understanding of your domain, right? So depending on what exactly you're hired for, is it a risk, right? Is it compliance? Is it market research? Is it financial product engineering? You have to have a certain deep expertise or real direct knowledge, experience in that. Second of all, I think you have to be able to challenge you have to be able to challenge. It's also not easy to challenge people, and or you have to be ready to be challenged. So it's important because a lot of people don't want to be challenged or don't want to challenge the others, right? So, and we always kind of foster that in the business. So not to follow, but to challenge, right? So that's when you actually get some granularity, and everybody can ask any question for anyone and question anyone, primarily for the most part. So that's important. So we kind of test that, right? And then we think it's important. And I think the work ethics is important. You won't know until you start, but you're trying to find, okay, do you do any extracurricular? If people do sports, usually or professional, like semi-professional sports or varsity sports, you know that they're more, they would have to army, you know, they're going to be more professionally rounded to ethically to do the job rather than it's, let's say, you've never done nothing, no charity, no sports, right? And then you kind of question a little bit. So you want to have that professional ethics kind of checked on. That's about it. And then you try, and then usually if you want to identify quickly if it works out or done, not to invest too much in the candidate that's not going to work out. So usually we do about 3 months. We'll try to evaluate within the first 3 months.
Okay. Okay, great. Well, thanks for sharing that. Obviously, we've covered your background, the company, kind of the industry. Is there anything else you'd like to do before we wrap up?
I think regulatory is an important part in crypto right now, especially with Trump, right, at the White House. I mean, crypto industry had a really big hope, right, for the change. I think it happened either for the good, for the worst, right? It's hard to say yet. I mean, generally, the markets, I mean, really unpredictable right now with everything that happened. So there's definitely a lot of still unpredictability, but at least we can really see on the regulatory side, on the bills that they're passing, on the regulation that's right now been reviewed. The banks have become there was an Operation Choke Point 2 before, right? And the last two administrations. And it was really challenging to get a banking relationship with the crypto company, even for the corporate banking. I mean, not saying the least, I mean, the client side of that. So right now we can see it's definitely flexing up. So there's more opportunities for businesses to open up bank accounts and to service their clients. We see that stablecoin bill is coming as well. That's a great news. I mean, the biggest stablecoin in the world is USD. Not another stablecoin. Mexican peso stablecoin was issued. Euro stablecoin was issued. Nothing is close to that, and it's good for the US because it does penetrate emerging markets substantially, and most of that collateral under the stablecoin goes to the T-bill. So I think Tether is the 7th largest purchaser of American T-bills globally. So some crazy numbers, right? So it's not a country, just a business, but they issued $150 billion stablecoins, and I think 120 billion is in T-bills. Some very big numbers. So I think the regulation is important. So more, because crypto always like that, and right now it seems like we're on the right track. So I think this is very important for the operators to understand as well. There's going to be probably still a black market and a regulated market. Always there's a black market in anything, right? So crypto is not an exclusion. There is always a black market to service certain group of people and certain flows, but it's going to be more deviated than before. Because before it was all kind of gray, and now it's going to be a clear distinction between the white regulated players and the black unregulated players. So I think it's an important items to consider for the clients and for the operators.
So do you see the changes in the regulatory environment around crypto in the US? Does that affect the global market?
Not really. I think Europe is already on their way to MiCA. MiCA is like a unified crypto regulation across Europe, and it's been delayed in different jurisdictions. Dubai is doing their own thing with VARA. Singapore is doing their own thing with their mass registration. So I think it's still segregated, but I think it's good for the U.S. businesses to come back, because a lot of U.S. businesses went offshore, a lot of U.S. businesses went to the Dubai and to the other jurisdictions where they could easily operate. So I think more clarity comes to market and more banking relationships open up, more businesses are going to be reallocated back to the U.S. because it's still the largest and the best capital markets in the world, right? So.
Okay. Well, Max, anything else before we go?
No, we covered it all.
Okay, great. Well, thank you so much for being on the show today. I know your time is very valuable, so I really appreciate you being here.
Thanks a lot. I appreciate it. Thanks for having me.
Absolutely. And to all you listeners out there, thank you for your time as well. And until the next story.
Thank you for joining us this week on the Leaders in Payments podcast. Make sure you visit our website at leadersinpayments.com, where you can subscribe to the show and where you'll find our show notes. If you enjoyed listening, please share on your social channels as well.